Picture this. You own a little piece of a company. You don't work there. You don't call them. They never call you. You don't lift a finger. And 4 times a year, money just miraculously shows up in your account. It's not a trick. It's not a scam. Ladies and gentlemen, that's what we call a dividend. Today's word is dividend. Here's the whole definition. Here's the whole thing. A dividend is a slice of a company's profit paid out to the people who own the stock. They're usually paid quarterly every 3 months just for holding on to the shares. It's the closest thing the stock market has to a thank you note, except the thank you note has money in it. Now, here's how your genuine Wall Street, gibberish speaking financial professional think, pinstripe power suit, big tie, cufflinks. And here's what they say. They want to make it sound really smart, right? So they can justify all their high fees. A dividend is a distribution of a portion of a corporation's retained earnings declared at the discretion of its board of directors and disbursed to shareholders of record on a per share basis. Right. Or as we like to say, hey, the company made money and they're mailing you your cut. Pretty straightforward. Now, let me draw a very clear line. A dividend is a share of real profit paid in cash, and it lands in your account whether the stock went up or down in the most recent quarter. It's income that you don't have to sell anything to receive. But a dividend is not guaranteed, right? The board of directors decides each quarter what that dividend should be, if anything at all. They can raise it, they can hold it steady, or they can cut it. And, oh, by the way, a big, fat, juicy dividend on a shaky company can be a big, shiny, flashing yellow, or even a flashing red light, not necessarily a gift. When you see dividends above, 8%, it's time to get a little bit nervous, time to do a little more digging on why that dividend is so high. So why does this matter to you? Because in retirement, a dividend can act like a paycheck that keeps coming after the working paychecks stop. And it does not force you to sell your shares in a down market just so you can eat. Now, again, I'm not saying that you should back up the truck on dividend-paying stocks as your only source of retirement income. But owning some dividend-paying stocks as part of an income-oriented portfolio might make good sense. Again, moderation, diversification, dividend-paying stocks, check. Yes, a good thing. 100% of your retirement income based on dividend-paying stocks, not a good thing, right? What happened in the financial crisis when the banks and insurance companies were the best dividend payers? They ran into some trouble. First thing they did was they whacked all their dividends. Now what do you do for income? Well, I'll just sell the shares, right? The shares were all down 30 or 40% as well. And you can see it doesn't take a genius or a rocket scientist to figure out that that's not a good outcome. So yes, to some dividend-paying stocks, no to everything in dividend-paying stocks. So here's my question for you. When your working paycheck stops, what's the plan to replace it that doesn't involve selling your investments at the worst possible time? Let me know in the comments. We read every single one of those. So to close, a dividend is one of the few times in finance that the money comes to you. And if you're wondering whether the income side of your plan is built to keep paying you after you stop working, that's a conversation worth having. We believe that the core piece of a comprehensive retirement plan is the income plan. Income that is reliable and dependable, that will last as long as you do, and that will help you keep pace with inflation. I'm Darren Vilardo of Tekton Wealth Advisors, and as always, we say we will serve you, not sell you. And what we're most known for here at our firm is to love, serve, and care for our clients so they can live their best life in retirement. Okay, next, we covered the building blocks one at a time, some of these basic concepts around financial topics. Okay. Next, we're going to talk about what happens when someone bundles hundreds of these stocks or bonds together for you, what we like to call a mutual fund. So stay with us for episode 19. Again, I'm Darren Vilardo. Thank you so much for your time and attention. If this resonates with you, then please hit that like or subscribe button to help out the channel. Thank you so much, and God bless.